Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, May 15th, 2017. Markets, again, having a continued move to the upside. Interestingly enough, we're seeing the S&P lead the charge today. The S&P's basically hovering up about 0.5% or so, while the NASDAQ, the QQQ, which is the chart you see before you on the daily chart, is only up about 0.17%. Now, this is very interesting because this is a change in character from what we saw last week. Last week, it was the NASDAQ up, and away, while the S&P 500 actually had a down week. So you're seeing a money flow reversal here, money being pulled out of key names such as Apple. And this is interesting because if we go to the Apple chart here, guys, obviously Apple had a monstrous run over the last week or two. But we are seeing it coming down today. And more importantly, on the intraday chart, what I'm finding fascinating is that you had a bullish consolidation pattern all Friday. So up it went, and then consolidation. Usually this leads to a breakout. And you saw an attempted breakout on the chart here, but then it failed. And a failed bullish pattern, as we talk about to our members here at InTheMoneyStocks.com, signals usually a bigger change in character or bigger reversal than just, a small down day like today. So what I'm expecting from Apple is further downside throughout the week. And this leads me to my next point that I want to discuss with you guys. The key here is understanding the institutions on options expiration week. And if we go back to the QQQ, and I talked about this with my members in the No Hype live broadcast last night on Sunday night. And again, folks, please be informed. If you're in the research center, if you're a member of the research center, you get live broadcasts twice a week. You get 2 daily videos done by me and my partner every single day. You get live trades in the research center with timestamps, entry, exits, stops, and targets. All of that's included in the research center. And by the way, there's a 7-day free trial. But anyways, the point is this. We talked about this last night, how there's a huge amount of open interest on the QQQ, the NASDAQ 100, at the 135 level. So right around here. Okay, right around 135. Now, what does open interest mean? It means that there's a ton of puts and calls that were bought usually by average investors with a strike of that 135 level. Well, who's selling? I mean, ask yourself this. Does the average investor sell thousands of calls and puts to other average investors? No. There's a lot of risk when you sell options. I mean, remember, you can technically have unlimited risk. I mean, you could just get crushed on it. Now, listen, on the indexes, you're probably not going to get that, right? But the point is this. The institutions are the ones selling the options, the puts and calls, to the average investors. All right, average investors love options. They're like addicted to them. So the key is this. If you have a ton of open interest at like 135 on the QQQ, right? If you have that ton of that, what it tells you is that that's where the majority of these puts and calls were bought by average investors, meaning that that's where the institution will maximize profit if they can get those to expire worthless. Remember, if all that open interest, if all the puts and the calls expire worthless, the premium that was paid for those options is pure profit to an institution or many institutions that sold these. So what you're going to see is the idea here is that there's going to be a concerted effort this week to drive the Qs south towards 135 to maximize profit. Now, again, there's no guarantee this happens, but there is a good likelihood that it could happen. Okay? So again, the idea here is you could see a good push on the Qs to the downside over the next few days, taking it back towards the 135 level. And again, the idea being very simple that the institutions want to take all of that as pure profit to pad their bottom line. They don't want to pay off the average investors who bought those puts and calls. And in this situation, by the way, the calls would actually be in the money, but the puts would expire worthless. So the idea is just the calls would have to be paid out. The puts would expire worthless. But the institutions, the idea here is they want to push it south so they can make more money on those calls while also having those puts expire worthless and being pure profit to them. All right, so that's the idea there, guys. And again, just to show you here, take a look at Facebook today, down 40 cents on the day. I mean, you're definitely seeing a weakening in name brands. Facebook, Netflix. I'm just going to go over a couple of the big names here. Netflix down 50 cents here on the day. We have Apple we just talked about. Take a look at Amazon today, down about $3 Even Tesla. Take a look at Tesla, down $7.50 or so. So there's definitely a little shift here between what was going on in the S&P last week and versus the QQQ Nasdaq 100 this week. And again, let's just keep that in the back of our minds. Let's just remember that you have a ton of open interest at the approximately the 135 level. Let's just see if at least the market gets pushed partially in that direction. All right. Thanks so much, guys. Come join us at InTheMoneyStocks.com. We're going to be giving out more trades throughout the course of the day, throughout the course of the next few days. Get involved, make money. Talk to you soon.